Test. Can you hear me now? I think you should be able to hear me now. Let me know in the chat real quick before I get going again. There we go. God darn it. Well, that was a lot of information you guys missed. All right. Well, what a day. Well, happy Wednesday, happy Fed Day, guys. Sorry about that. That is stupid of me. I did not look at the chat, and I just assumed everything was good. Welcome to the chat, Prabs, Autumn Love, Eck, UB, Maxime, UB, Vasanth. Welcome to the chat, Cyber, Philip, all you guys. Welcome to the chat. Sorry about that. Let's quickly get this moving back in the right direction. All right. Sorry about that. Okay. So we are in a diagonal structure on both charts. We have got some throw over here for wave 5. They have hit just above the 1.0, the 16677 area, and rejected. On the 3 hour, they're at the 21. The 21 is a great momentum indicator if you don't know about it. We teach it in my room. I have a whole video on it. It's great. They never get too far away from it. So if they spike away from it, they come back and test it. If they spike way down here, they come back and test it. Spike way up here, come back and test it. So really, really great indicator. And when they break through it to the opposite direction and can't get back above it or back below it, look for them to fall off quickly. So for instance, here they broke below it. They couldn't get back above it. And then boom, fell off quickly. Got above it, came back, tested it and held, shot back higher. Couldn't get back above it here, fell off quickly. So as soon as you see them break back above it and hold, expect them to launch. As soon as you see them break below it and hold, expect them to drop. Anyway, going quick now. Sorry, we're going to run out of time. So whole point of today, we're doing the indicator. If you saw me doing the levels before for Mentor Q for my rooms, I'll put those back on the screen real quickly. You guys got to see them today. This is an incredible tool. It is called Mentor Q. I have a link in the description. You can get 20% off of it. By using that link, I do get a kickback. Full disclosure, I don't ever try to hide anything, guys. I'm pretty honest and straightforward. It's a great tool, though. I don't recommend anything that I don't use and love. I only recommend 2 things, actually, TradingView and this. So Mentor Q gives you these levels. 1-day max and 1-day min tend to be where the market holds for the day. Doesn't mean they have to get to those levels. It doesn't mean it's definitely going to 650, 665 or 654. It means that if it gets to that level, it's likely not to push much through it. So think of it like the ocean and building houses on the shoreline. Everybody knows where the tide comes to at high tide, so they move back a little and build their house because 99% of the time, 99.9% of the time, we know that the ocean's going to stop well short of the houses. However, there are things like hurricanes that push the tide in or tsunamis, and those things get up into the houses, and they break through levels that never get broken through or shouldn't be broken through. So think of it like that. They are not foolproof, but they are very consistent most of the time. Today could be a hurricane day. You have the Fed. It's a huge Fed day. Everybody's anticipating the rate cut. Will it be 50? Will it be 25? I honestly don't care what they decide. But it could be one of those days where the 1-day max or 1-day min doesn't hold. So keep that in mind. But those levels are generally, more often than not, very, very, very good. And they're really good for day trading. You can see right here, they came down, they spiked. This is the high volume level. So that's part of Mentor Q. They came down, they spiked it, and then they ripped it right back up in the opposite direction. So they never could close below. They spiked through it, closed above, spiked through it, closed at, and then the very next candle ripped it straight back up and did very well there. So these levels are very important for where the volume is. That's a high volume level. That's what an HVL is. And how to use them. So if you want to check that out, there's a link in the description. You do get 20% off. They're awesome levels. We are day trading today, and we are day trading with my indicator that I created. It's called IWJ Pivot Point Pro. Right here, you can see it. It is a paid indicator. You can see right here. Once you pay for it, if you don't have a TradingView account, you can get one right here for 20% off. Click that link, and then we give you all of the information. We tell you how to set it up in TradingView. We tell you how to set up the indicator. We tell you how to day trade. We tell you how to trend day strategy. So this is a weakness of the indicator. If the market's going to trend, the indicator is not going to do well because it's looking for reversals off of those high volume levels or major support and resistance levels. Well, on trend days, those break and they don't work. So we identify that very quickly so that we don't get trapped in trading something that's not going to work. And then finally, our weekly swing strategy crushes it. You can see the big drop here on the sell, the huge win here on the buy, nice win on this sell, nice win on this sell. A couple of these didn't work out. That's going to be how trading works. Another huge win on this sell here. So we don't peddle get rich quick. We don't nonsense. What we peddle is, or what we push is, trade with a trading plan. Trade consistently, trade smart, use the right sizing, and you will do extremely well in the market. We have a $60,000 return over 20 months on a $100,000 account. That's 60%. That's an incredible return on your investment. So that's what we do here. We push consistent, great trading. Could we lose today? Absolutely. Will we lose today? I don't know. Maybe. We have losing days. We have losing weeks. We even have losing months. We don't have losing years. We don't have losing quarters. We just trade consistently. Out of the last 20 months, we have 15 winning months and 5 losing months for, again, a net gain of 60% on our investment. 20 months, 60%. That's, guys, you can't beat that. If you follow the rules, it's a simple game. All we do is play our edge over and over and over again, and that's how you do it. So we don't trade in the pre-market. This is blue and yellow, post-market and pre-market. We need it on for the indicator to work properly, but we don't trade this nonsense. There's no volume here. And when there's no volume, trading gets wild. So you can see there's just nothing down here for volume ever. And the indicator is looking for high volume areas. So it still gets them pretty close. I mean, this sell was a winner. This buy was likely a winner. This sell, maybe, I don't know. But this buy over here was a winner. But it still gets them pretty close. But if you trade this consistently, you're going to find that it's not great. So we want the volume of the real trading hours. That's how we do that. And that's what we do. So about 6 minutes to go here before we get to the open. And once we get to that area, we will, or once we get to the open, we will be watching for our buy and sell signals. And I'll put out the alerts in my room, as well as alert you guys as to what we're doing, what trade we're making, and how, and go from there. So hopefully you guys got that. I know that was fast. Sorry about the volume issue at the beginning, but we're here now, and we're ready to trade, and we're going to have a great day. It's Fed day. What do you guys think? Up or down with the Fed? I'll tell you what I think after, but honestly, this is not a clear-cut Fed day for me. Is put support on the SPY at 640, unusually low. Otis says up after the announcements. Welcome to the stream, Otis, Dan. 640 is not unusually low. It is 20 points down, or about 200 ES points. And I don't think that that's crazy for what the bears want. So they're willing to take that strike, and as price moves up, they don't want to move their price up anymore. What happens is the market gets into a frenzy, and you get FOMO, and you get euphoria. And when the market starts to push, if you keep chasing it, you're going to just continue to get beat. Set their price. So when they set that 640, the market was probably around 650, maybe. And then price moved up to 660, and they said, no, we're not going to chase the euphoria, because all we're doing is chasing, until it turns down. So they will keep the spot price until or unless they see something that Do you have time to go over the big picture on ES? I have 2 minutes. Let me see. Let me see if we're probably going to have a sell right at the open. So give me time, Maxime. I'll go over the big picture when I get a second. Right now, I got to get set up for this trade. So very likely to see a short around the open at some point. That will be the next trade. You can tell because we got a sell here and then they pushed up and got a sell stop. So as long as this sell stop holds into the open, we would be looking for a sell indication around the open. However, there it just went away. It may not hold. So we'll have to see. But if we get a sell stop, we'll be looking for a sell at the open. So my thoughts on the Fed today are, good morning, George. Welcome to the stream. Are that this market has ripped higher, and it is very, very, very stretched. And we are at some major resistance zones as well as some areas that you would expect rejection, even in a minor sense. So my lean would be down. However, if they stay above 6,600 SPX today, and they're above it at the Fed, that does lead into positive gamma, which means the market makers have to cover, and we could see 6,700 as soon as today. So if they're below 6,600, I would lean down. If they're above it, I would lean up. Are you guys saying you have volume issues again? Because I can see the volume now like I could before, so hopefully you hear me. Okay, we're looking at pre-market high of 660.3. They're jamming it right into that and potentially above. The true pre-market high is actually up here about 660.48. What the indicator I use does only converts the yellow. So the blue and the overnights, they got up a little higher than that, around 660.50. So they haven't truly broken the pre-market high yet. Keep that in mind if you're looking at trend day possibilities. If we do look at supporting evidence, the transports are red, the banks are a little bit green, SMH and NVIDIA are red. RTY is very green. However, remember that's because of contract rolls, so they're not as green as you think they are. Options price, if it looks like. Pre-market high and above on this first candle. I do want to, guys. So currently, we're only a minute and a half in the ADD 900, but we're only a minute and a half just kind of in the we'll see boat. Right now I have a 6 my sell should we get one coming off of this key level that they just spiked through and are now rejecting. So I think the issue we're going to have is NASDAQ did not get a sell stop in the pre-market, but it's trying to get one now. So we need this candle to kind of close up here around the pre-market high in order to get the NASDAQ on board with buying power. But strong as ES right now. So right now your ES candle is very green. Or your SPY candle, if you go over to the NASDAQ, you can see that. One second here. The NASDAQ candle was down here, just starting to move up again. So we need the NASDAQ to stay about right there for now and then set us up. The NASDAQ may come up into this 24,550 area, and we'll look for them there to be an issue. Volume is choppy. Sorry about that, guys. Not sure what's going on with my setup today, but now I'm getting an issue with. Okay, I just rebooted my internet, so hopefully the audio is better. It's I don't know what's going on with it right now, but we are. Maybe we just had one of those deals where you just got to reset your internet. All right, I changed a few things. Can you guys hear me now? All right. There we go. Okay. So we're updating here. All right. NASDAQ is breaking down right now. They're going to go test the overnight low early, and ES and SPY are following along slowly, but not really. They aren't. I mean, they're nowhere near their overnight low, and NASDAQ is down in this level here where I have my mouse. So, keep buffering spinny circle. It should go away. I just reset everything, so hopefully it works now, and we can continue on here. At any rate, if we go look at NASDAQ, they are melting down a little bit. They're trying to find a low here down near this support zone. But the overnight low down here at 24,457 is going to be a key area to watch. If they get down there and hold strongly and bring it back up, then we can look for the NASDAQ to rebound. If they break through that, it could be a situation where they really start to accelerate, and that's that could be a dangerous situation on a day like today. So keep in mind that the market could explode down if they break this pre-market low solidly. SPY is starting to follow along now. I said earlier that NASDAQ generally leads. I suspect the SPY will follow. So keep that in mind. RTY very positive. No, it's not. Remember, RTY had contract roll, so it's got a fake. It's got kind of a fake gap. All right. Can you see and hear now? Is anyone even still here? All right, we'll see if this works. I rebooted the computer. Sorry about that, guys. We'll see if we get a trade. Right now, though, we do have a potential trend day setup happening. As I stated, hold on 1 second. Let me get this. I'm trying to get everything set up again. As I stated, if they stay above 6,600 on the SPX, which they came back down and tested there and bounced strongly, as long as they're above that, the keys to the kingdom and 6,700 are open for launch. If they cannot stay above that, the downside does open up. Now, NASDAQ did test its low and bounce for now. Trying to get everything set back up here, so give me just 1 second as we go through. We are seeing a very positive ADD right now. You're seeing a decently positive VOLD, but the NASDAQ is still looking fairly weak. It is back tested in comparison to, let's say, the SPY. The SPY did come up here and poke back. So for reference, this is an interesting day. It's Fed day, so a little bit different. For reference, a trend day gets above the pre-market high, which was right here, so they spiked it. Then it comes back and tests VWAP in the 21. Typically when it gets below this, you would expect continuation down to the pre-market low at 658.57. So I do have in the back of my mind a little skepticism about this being a trend day up. However, they did come back and make a new high, which is typically what we look for in a trend day setup. Now, that being said, in general, I take the first sell or buy setup on a trend day because a lot of times you get a fake out, and that fake out looks a lot like this. So you get a breakout, they come down like, oh, we're going to sell, they trap some people, they come up like they're going to buy, and then they do this. That's how reversals are made. They set a couple traps, and then once they've trapped both sides, they unleash. So I'm a little skeptical. The supporting evidence does tell us, the IWM is green, the banks are green, the transports are green, the ADD is green, the VOLD is green. So right now, you do have potential for a trend day, and you do have supporting evidence for a trend day. This being Fed day, I think there are going to be some tricks and traps. So I am a little skeptical of this being a breakout. Now, if they just continue and break back over the 660, 65 and they do it with some force, then, we'll probably have to sit on hands today until the Fed announcement and see what happens from there. But if they come down and break this low, very likely they're going to come down and test 658.57. And looking at the NASDAQ, the weakness comes there. So you see SMH is weak today. NVIDIA is very weak today. Meta is weak today. Microsoft is weak today. Netflix is okay. Amazon very weak today. Tesla very weak today. Google is weak today, and Apple's doing okay. So most of the Mag 7 is red versus the market, which is green. So when you see an ADD at 1400, but a market that can't break out, you need to turn your attention to the Mag 7 because they're likely red, and that's what you see exactly here. And the NASDAQ looks weak to me. So until or unless the Mag 7 start turning things around, this market is going to be choppy, which is kind of what you'd expect on Fed day anyway, and then we'll see what everybody decides they think at the announcement. Right now, you still have and NASDAQ has completed a full sell cycle. Now, that doesn't mean that they can't keep selling. It means that they've moved from buying into selling, whereas the ES or SPY are in a weakening buy cycle. So they're still on the buy side of moving into selling. And what I mean by that is, if you're unfamiliar with the indicator, so the market's going up. We're in a buy cycle, right? The indicator's looking for weakness off of a key level. So let's say it's here. Let's say this is our key level. Once it starts to weaken and the parameters are met, we get a sell signal. Now, this market is still in an uptrend buying market, but it has shown signs that this is going to be a top, or right near here should be a top, and we're looking for a reversal. So we're looking for this to turn over. It's still in a buying cycle, until it meets certain requirements, and then it gets into a sell cycle. NASDAQ has met those requirements because it's sold off far enough and low enough. ES is working on that, but still in this uptrend buy cycle. So the market is looking for weakness in the cycle, and then it's looking for the cycle to reverse. So from a buy cycle to a sell cycle, and then we would look for it to reverse back into a buy cycle. So when it's doing this, what we're looking for first and foremost is 7 to 10 points on the ES. That usually gets us about a 20% win on our money, and we take some profit there. Then we're looking for the potential continuation into the sell cycle that would give us a big win and an overall bigger gain. So NASDAQ is still in a sell cycle. ES is working on getting into a sell cycle. So we're not going to get any kind of trade yet until they get in sync. NASDAQ just opened much weaker than the ES did. I mean, you can see that the ES is basically sideways at the open, and if you look at the NASDAQ, I tried to say this earlier when the markets were choppy, you can see that the NASDAQ sold into the open. So they tried to rip it higher, then sold, and then ripped it back up and sold again. So NASDAQ much weaker at the open than the ES. And again, I would trust NASDAQ first until proven otherwise. While ES pushed over its pre-market high, NASDAQ is testing its pre-market low. So very different directions here. I hope that made sense to everybody. Sound is low. Yeah, it's always something. I just turned it up, guys. Hopefully that's better. What'd you say earlier? So today, if we look at the RTY real quick here, today, if I can, let me move out to a daily chart for you, is contract roll. So contract roll, if you're not familiar, is when futures roll to the next contract. So September is the end of the quarter or the start of the next quarter. And so they move into that, what's the word I'm looking for? Into that next contract. Now, when that happens, because it's a futures contract, you're going to have premium on that, which means it's going to be much higher. So if I come into the daily, you can see right here, contract roll occurred today on the 17th. And if we do B adjustment here, you can see that the gap up was from 2406 to 2424. So 18 points of the RTY greenness is in fact contract roll. So they're up. Now they're up. It started green and has gotten very green. Now it is up a lot more. It's up almost 1%. So look at the IWM up 1%. You can see that the RTY is up 1.6, and that's because of contract roll. So it's not really up 1.6. Mostly it just rolled the contract. Triple witching on, it's quadruple witching actually, George. Quadruple witching on options this week. And Fed announcement today, and jobs, and other things. I mean, there's still good data this week that's coming in. If I look at the economic reports, I forget what they are the rest of the week. Let me pull it up. Today you have Fed. Tomorrow you have jobless claims and the manufacturing survey, and then you have a Fed speaker. And then next week, PMI, I think GDP. Yeah, GDP, new homes, decent. Over the next 2 weeks, some decent catalysts. But Fed will be the biggest one of the week here. So keep that in mind. Now, if you look at the SPY, they made a reversal candle yesterday. It wasn't on great volume. That would be the negative. However, it doesn't have to be on great volume. If you go back and look at 22, they had low volume at the actual high, and then when they followed through to the downside is when the true volume came in. So you can see something that goes like this on low volume, bounces, and then the high volume comes in. So you don't have to have high volume at the high. It is nice. Like if you see this volume at this low right here, it's huge volume. The bulls were battling here, and then the bulls fought back. That makes a solid low. But You don't have to have that. It's not a big time requirement for a top to be on high volume. It is nice, but if you look at April, the high is right here. Actually, the February high is right here. February is 25. The volume on that is almost non-existent until you get over here. There's better volume, but not great. So you don't have to have high volume for a big reversal. It just helps understand that a major top is in place as opposed to maybe a intermediate top. Now you do have a little bit of follow through here so far from the SPY. They need to come down and break the low to really show follow through. And if they break the low, it opens the door to this gap fill here at 657. Ultimately, getting below the 8, which is an extremely good momentum indicator, would be important. They can definitely get down there today. The one-day minimum is even below that. And if they break that, we're likely looking down here at 650. And then we'll see what happens should they follow through with this downside. But new low on NASDAQ, I believe. Let's go look at that real quick. Did they break yesterday's low or the overnight low? Sorry for all the headaches today, guys. I don't know what was going on in the internet world. Hopefully we're good now. But yeah, NASDAQ spiked its pre-market low. So you have kind of an interesting situation here. ES and SPY went through their overnight high, back tested and made another high, whereas now NASDAQ has spiked its overnight low. So you got two markets telling two different stories. And we'll have to see which one is telling the truth. Again, I usually favor the NASDAQ in these situations because the Mag 7 is so powerful that if the other stocks get on board with the NASDAQ or on board with the Mag 7, and I do see some weakening now in the ADD, just a little bit, nothing crazy, you'll see some flush real quick. I mean, the Mag 7 for the most part is down. Everything's down a minimum of 0.5% except Netflix and Apple. And most of them are down over 1%. So Google's only down 0.2, but Google's been kind of a monster lately. It's been really strong. ADD pretty bullish today. Everyone expecting a dump today, so no dump till Friday. There is a lot of Fed fake outs. So there's a lot of times the Fed rips and then the next 2 days are down. There's a lot of time the Fed dips and the next 2 days are up. Sometimes everybody expects it and it happens. I don't think everybody's expecting a sell-off today. If you go look at all of the banks, they all just upgraded again their future targets on the S&P. They're getting into euphoric states, and if you look at the statistics, almost every time the banks are wrong on those updates when they give you the new targets and the new ideas. If you remember, in April, all of them cut their targets way down for next year, and then the market immediately snapped those off. So the banks always, when you get these euphoric runs or these flash crashes, make rash decisions, but right now everybody's upgrading everything to higher, and that's kind of when everybody gets euphoric and things start to happen, but at least a mini correction, if not a bigger one. NVIDIA might be pushing things down. I would say the Mag 7. I mean, NVIDIA is obviously leading the Mag 7 down, but you have Microsoft is 0.5% down. Meta, who's a huge one, is 1% down. Amazon, who's a huge one, is 1% down. Tesla's a big one. They're 1.5% down. So there's plenty of Mag 7 stocks leading or holding the market down because the overall breadth of the market is good. The ADD is very good today. And when you have that, when you have overall good market breadth and you have a market that is actually moving down instead of up, you have to immediately look at what controls the market, and that's the bubble. This is a concentrated market, guys, and this is the proof of it. This is how you see that there is a 1,400 delta of positive stocks. So the ADD, if you're not familiar, the ADD is the delta between stocks that are above yesterday's high versus stocks that are below yesterday's high. So if they're above, or yesterday's close, not high, excuse me, yesterday's close. So if they're above yesterday's close, they go in the positive side. If they're below, they go negative side. So if you have 10 that are above and 5 that are below, you have a net of 5. Right now we have a net of 1393 positive. That's a huge number. Yet the market is going down. And this tells you how concentrated the market is, how strong the Mag 7 are, and how much they influence what happens in the market. And what it tells you is when the Mag 7 has a correction, and they will. Nothing goes up forever. Look at Intel, look at Bitcoin, look at UNH. I mean, there's a million of them. Look at all these stocks that go ballistic, and then they hit their peak, and then they cut half their value out from under them, or more than half of their value. The Mag 7 will have their time to do that. And when they do, it won't matter what the market thinks. It won't matter what the breadth is. It won't matter what anybody else is doing, because it'll be so strong that, one, it'll just change sentiment. People will jump on the selling bandwagon, so you'll get a negative ADD anyway. And two, even if you don't, they're bringing the market down when you have a 1,400 positive ADD. That is insane. I believe it's the highest concentration of market ever, and I believe the number is 35 to 40%. That's somewhere in there of the gains that the market has had since 2022 are concentrated in the Mag 7 and like two other stocks, PLTR. I think there's a couple, Avgo maybe. Anyways, like 10 stocks controlled 35 to 40% of the market gains. That's insane. That is so highly concentrated. And if I had to guess, I would say the equal weight's doing okay today. Yeah, it's up 0.5%. So keep these things in mind, that this is not a strong market. It is a strong Mag 7. And when that strong Mag 7 breaks, the market will break with it. There's no question. I know it's been flaky, guys. Hopefully you guys are hearing me now and everything's okay. Really sorry for today. I know this sucks. It sucks for me. It's not a great look, so I do apologize. This is not what we were hoping for. Well, we were hoping to get a sell signal, which would have been great. We're on the NASDAQ, actually. Let's get back where we need to be. Now we have ES and SPY following along, and we're looking for a potential buy. We are coming down into some key areas. The overnight low, yesterday's low, all of those are going to be important. This week's low, all of those are important levels for what's printed. You also have a high volume level at 659. So we'll be looking for a buy here, should we get one. So we'll change our trade setup here from put to call. And let me see what strike I'm going to be looking at. 660 still. And then we'll fill in the rest of the parameters when and if we get a buy. If we don't get a buy, we could see, we could see some breakdowns. So thank you guys for sticking with it through the reset and everything. I know that's not the most fun, so I do appreciate that. So weekly lows are important, very important, because when you break a weekly low, that means obviously you're making what? A new weekly low. Do I have last week's low on here? I think I had to change this. Let me get that on there, because last week's low is extremely important. Breaking a last week's overnight high, low, close, and average. Yeah, that's what we want. Breaking a weekly low is a big deal because that can be a strong signal of a trend change. Last week's close was 657.41, and last week's low is way down here. Average 653, open 648, low 647. So last week's low is way down here. They had a monster bullish week last week. Very, very squeezy. They trapped all the bears on that quick spike down and then ripped it higher. And now they've trapped some bulls, and we're heading into a big catalyst, so they could be trapping some bulls here as well. We only have one read on this, by the way, where there was a very, very high chance of a rate cut with the market trading into it. It's happened 2 times, and both times were opposite. So the first time the market was trading up into that rate cut and got smoked, and the other time it was trading down into that rate cut and absolutely ripped higher. So both times it went in the opposite direction. It was kind of a buy the news, or buy the rumor, sell the fact, or sell the rumor, buy the fact, whatever you want to say, depending on which side of that you were on. So keep that in mind, that we were ripping up into this, and the last time that happened, it was a absolute bomb to the downside. And we are looking for some kind of corrective action, whether it be medium term or long term. So it does line up well. So my gut still tells me that we need lower, and we should see lower. But until they get below this 6,600 SPX level over here, they are in positive gamma. Nice selling bar here from the bears, distancing themselves and creating a new trend down. So what you've seen here is you've seen the 8, and VWAP was above the 21. That's a little bit bearish already, but the 8 was above, so that's kind of your momentum detector. They got through that and spiked down, and now the 8 has moved below the 21, and they rejected the 8 as well. Keep in mind this is 8 5-minute bars, so it's only 40 minutes of trading that it's looking at. However, this is something that we use for momentum, and the 21 is a great kind of trend bar, but the 8 is momentum. So as long as they're below the 8, pressure is heavily down. If they get back above the 8, then we'll see if they're going to hold trend with VWAP in the 21. So what you're looking for here is, as they continue down, they're going to need to backtest. Nothing goes down forever. I mean, we've seen some markets get nasty, but eventually they're going to need to backtest. They just did backtest the 8 and failed and made a new low. That's strong to the downside. If they backtest again, you want them to hold the 8 and make a new low. If they hold the 8 and make a higher low and then get back above the 8, that starts to look a little more bullish, but we have the 21 as a backstop as it comes across here. And if they hold the 21 and then make a new low, they've held trend. So here they're holding momentum. Here they're holding trend. So keep that in mind as you look at this. VWAP is the ultimate backstop if it's the higher. Sometimes it's lower. It just depends on where it is. In this case, VWAP is the ultimate backstop. If they can't get through VWAP and then they make a lower low, then they are on trend as well. But the more lines they break, the more bullish it starts to look. But as long as they stay below that red line, momentum is heavily down. Texas Trader, I hope you didn't lose sound. I do have moments. I mean, I can't talk forever. Until something happens worth talking about, I'd just be babbling, and I babble anyway. So hopefully you didn't lose sound. Hopefully I was just waiting for the next thing to talk about. Key level here, you can see that they bounced this level in the overnights right here. They bounced it right here as well. They came down below it and came back to it. It's also, it's hard to see. I think today's low, yes, but what else is in there? Let me see if I can spread this out a little bit. Something else. Last week's high? Yeah, so last week's high. So they came back, tested last week's high right there, and the regular trading hours, they also did it a couple of times in the pre-market. So keep that in mind. We've just tested last week's high and are starting to bounce. If they can get through last week's high, very likely. And quite frankly, we got through the pre-market high and failed. Very likely we should visit 658.57. That should be our next target. And what happens is you get what's called a failed breakout. This goes in both directions. So keep this in mind when you're trading. It's a great tool to have in your toolbox because it happens probably 85% of the time. And that's not an exaggeration. They come up, they tried to get out above the pre-market high, and they failed. That shows weakness, and it shows strength in the bears, weakness in the bulls. And if they fail back below all three of these moving averages they have on the chart, VWAP, the 8, and the 21, then that's called a failed breakout, and you're very much looking for the pre-market low to get hit. Same thing happens to the downside. Here you had a failed breakdown. They came back and made a new pre-market high, right? So very, very likely we test this support here. It doesn't have to happen in a straight line, so be very clear about that. They can do it in a straight line. They've done it in a straight line lots of times. They can do this, but it can do this as well. But I would be shocked if we didn't get at least near 658 and, more importantly, hit 658.57. Sam, Texas Trader, welcome to the stream. Now that it's finally working. Appreciate you guys being here. Not much in the way of trading today. Very choppy open, very disconnected open. NQ was very selly, and ES broke its pre-market high, and so did SPY. So markets going in opposite directions do not tend to lend themselves to great trading. And you see this was very choppy at the open, and then by the time ES got on board with the selling, NASDAQ was way into its selling cycle. What do the red dots, what do the blue red dots? Oh, I think you're talking about, if I go in here, I go to style, cross over, cross under. Those dots, so those are potential squeezes, and they are where we're looking at the market squeezing or setting up a squeeze. So the red dots, what we're trying to, we work on this in the background, so this has not been updated in a while, so please ignore these right now. I don't have them on my chart because they're not important yet. What we're trying to do is put in points where this is indicating a sell squeeze, which it did, and this is indicating either the end of a sell squeeze or a buying opportunity. Here it indicates the end of the squeeze. And then if you got another blue dot over here, then you would see, call that a buying opportunity. But this is telling you that there's a sell squeeze. In general, this is trying to tell you there's a buy squeeze. And you can see they did squeeze up here and they did squeeze down here. But nothing's ever going to be perfect. So let me get that straight. They're not ready yet. They're not consistent enough yet for me to be happy with them and put them out. So that's what they're going to be eventually. We're still trying to get where we're happy with it. But that's the idea behind those. Uh, 659 will be a very important area as well. It's a high volume level. And even though they made the pre-market low down here at 658.57, you can see that all three bars stayed at 659 at the close. So this one spiked it and was above it. This one spiked it and got back to it. And this one held it and drove higher. So this area right here, I would expect at least a bounce, if not a potential take back to the highs. But keep in mind right now, They are below the 8. They're below the 21. So bounces could be, back to the 8 and then down, things like that. I would not be super aggressive until I got a buy signal yet. This can definitely unravel. Let's see what the NQ is doing, because it's going to be more important. So it has very, very often it has already hit its pre-market low, and very, very often the ES will follow. And they're testing it again. If they get back below this low, watch out. This is setting up for a back test of the 8 and a lower low that can come down into this 2440 area, or 24.4 area, which is last week's high, which the ES already hit. So things can start to unravel here if they can break these lows. I did mention earlier that you kind of get one of two things on Fed Day. Typically in the history of the Fed Day, it's been choppy, but more recently you've seen a lot of these types of days where the market makes an aggressive move only to either follow through or reverse it, at the Fed announcement. That's to be determined. But we've seen a lot more aggressive moves before the announcement on announcement day, whereas typically in the past you've seen a lot less of that. I believe the last Fed announcement, the market ripped higher into the Fed and then also ripped higher after the Fed. So this could be a case where it rips lower and then gets the Fed announcement and continues lower. Not sure. Depends on what level it's at when the Fed speaks. If it's at a huge level, maybe we get a bounce. Or maybe it bounces now. There's a lot of options that come out in the next few hours before the Fed speaks. So. IWM has faded a little. We'd really like to see it fade a lot. And if IWM turns red, that can really accelerate things to the downside as well. As I go look at the charts, ADD is fading a little off the 1500 level. It's down to 1271. Still very, very positive for now. But if it continues to fade here, and especially if it gets down below 1,000 and starts to accelerate down, the market will follow. Because the only thing holding this market up right now is breadth. The Mag 7 is trying desperately to bring the market down. And the small caps are keeping it afloat, essentially. NASDAQ trying to make a new low here. Keep an eye on that, because ES is trying to bounce a little off a key level, and NASDAQ is not having it on the NASDAQ side. So still seeing weakness on the NASDAQ. Each chart on its own, but NASDAQ is going into trend day down territory. So again, if you don't know that, we'll go over and look at it real quick. To establish a trend, you need to break the pre-market low, right? So they did that. Then you need to back test one of the major moving averages we have on the screen. Then you need to break the low that you made right here, and they did that. So NASDAQ is in trend day down territory, so taking buys is going to be less advisable. Of course, it's each chart on its own. The SPY can definitely go higher while NASDAQ goes lower. However, that is not typical and or usually the case. So be careful if you are trying to take longs. The irony is it feels like the market's down much more than it is, but it's 0.1% on the ES and 0.3% on the NASDAQ. So lots and lots of downside room here. So I personally like to watch one chart on this screen. So when I'm trading on my day trading screen, I have just the SPY up because I want to be able to concentrate on those trades as they come through. However, on a different screen that you guys aren't viewing, I have my Thinkorswim up and I have the ES and the NASDAQ both up. So I can see all three charts just by looking at another screen real quick. And that's how I'm keeping an eye on NASDAQ. I realize I can put them in windows on here, but it gets too cluttered for me. I don't like it. I have trouble focusing on one thing there. I have ADD in that way, and that too many things causes me to just not be able to focus on what I need to focus on. You guys probably already experienced that as I drift around in my speech all the time. So I do keep an eye on all three charts. And when something happens, I glance over to see, hey, what's the NASDAQ doing? Is it doing the same thing? And if it's not, we need to understand what the context is. And right now, the context is the Mag 7. You still think this is fourth wave pullback before heading higher, 6,600 area on ES. I mean, that's a possibility, but it depends on what levels they break. Right now, they need to get back below this trend line to really start the ball in motion, and then they really need to get below 6640 or so. If they get below that, then 6600 is a good consolidation area right here to look at, and also this high. So you have a lot of support right across this line, but it just kind of depends on how they follow through and if they follow through. DXY is at critical support. Yeah, the dollar's getting hammered pretty good. I haven't even looked down here to see. Gold's down about 50 cents. Silver about 50 cents. If I think that gold and silver still have legs, honestly. We got in them long ago. We've been in the metals. We have this EK Wax Fund right here. It is at 115. We bought it at 49 and change. So we put our retirement. This is where I told people to put their retirement money. Last April 2024, and it's up over 100%, well over 100%, in just over a year. So it's a nice way to improve your retirement in a year and a half. We're not perfect in my room. We have losing trades. We have all kinds of bad days, but we have a lot of great days. And what we build for the future. Right now, I have money in the S&P 500, which is basically at all-time highs. I have about 17% of my money in that, and some in cash and a lot in the metals fund. I had more in it, but I took some off. We took some off, and then we added half of that back. So when it got to about 100% gain, we took about half of it out. And then when it showed signs of bulling up again, we put about half of that half back, so about a quarter of that money back in. So our retirement funds are absolutely insane. And that's, the short-term day-to-day money is great. It's great. But the long-term money is even better. So I said this last week's high area would be a huge area. We should see a bounce off of that. You are back to the 8. We'll see if they can get through the 8. We may give them one chance to buy here. Again, I do think that it's extremely possible that you get a lot of fake outs today, or at least some fake outs. You've already gotten one. They faked breakout, and they failed it all the way down to last week's high. So you've had one trap, and it's very possible they can give you another one here, make it look like they're getting ready to break down and rip it back up. So we may entertain one buy and see how that works out. But if it gets crushed, like most of the bounces have, then that'll be our trading day. Sometimes the market doesn't give you a trading day. You just have to be like, cool, good day, market. See you later. And sometimes it gives you a trend day where you take a trade and it doesn't work out, or it does work out. Those are just part of it. Not trading every day is a good thing. You shouldn't be trading every day. You should take great trades when they come up, but that doesn't happen every day. Some days are absolutely dirt, sideways, nothing chop. Some days are trend days. But a great majority of them are decent trading days. Meaning there's enough movement within ranges that we like that allow for good trades. Can you show ADD and Vold on Think or Swim? Yeah, so I have to do it odd way because of how YouTube's live works. I'll have to screenshot it, but yes, I can do that. 1 second. So you can see the Vold here has slowly moved up and then leveled off here at about 53 million. And then ADD moved up into 1500 and has slowly been kind of moving down. What you really want to see is a big red bar here, like this one over here on Vold. You want to see that on ADD, and you do see that quite often. When the market really starts to catch momentum, you'll see the ADD start to really give you a big green or big red bar. Right now, they're just kind of slowly trickling down. But yeah. So consolidation at that last week's high zone, very common to backtest, especially if you get a strong move up. Very common, and in fact, almost the rule is that they're going to backtest a breakout. And it may not be the next day or the next week or the next month. It could be several months before they backtest. But they do like to backtest. And then how they handle that backtest is important. So they're coming into last week's high, 659.11. You can see they've spiked it 4 times now and not been able to get through. Typically, what you would expect if it's going to be a bull market and continue to bull is that the bulls will hold in this area and push off of it and try to go back to the highs. If they fail here, that is a sign of weakness of the bulls. So any breakout, if we look at a larger chart, let me see what we're looking at. I just want to see how close we are to getting a buy signal. Not close. Yes, or NQ is still getting killed. So anytime they break out, they tend to backtest that breakout. So if we go back to the daily here, actually let's do the weekly. So they tell you where the key levels are. The market just gives it away for free. Doesn't matter. So we'll just look over here real quick. This is a key level. Let me get this right here. This whole area, however you want to slice it, this area right here is a key area. Why? Well, the market came up to it, failed, came up, make it a lower low, and failed big time, right? So this area, if you just draw a line across, is going to be a really big area. What happened as soon as they got above that line? They tested it, tested it, tested it. And they held each time. Each time they got below it and held and closed above it. They never closed below the line. Never. And then they ripped it higher. So they back tested this several times from several areas. They got all the way up here and back tested it and then pushed off of it. So they back tested immediately, then came up, back tested it again from way higher, and it held. So that tells me 63.16 is going to be a huge area of support. Okay? Right here. They came up to this level, sold off strongly this week, right? They got above it, they back tested it, but where'd they close? Above it. They back tested it, where'd they close? Above it. They back tested it, where'd they close? Above it. They could never close a week below the breakout. If you close a week below the breakout, that's weakness. If you close every week above it, that's strength. Right? So this is Market Dynamics 101. Every breakout gets back tested. Every breakdown gets back tested. That's just the way the market works. For instance, over here, let's get all these lines off so you can see, they broke down. What was the first thing they did before they broke down again? They back tested the high. Failed, and down they went. So back testing is a huge concept. And did they close above this high? They did not, right? Nothing got above it and closed above it. They got to it a few times, couldn't get through, boom, down. So those are important concepts in trading to understand. This area here is last week's high. If they can close this week below that, that would be weakness. However, right now they haven't been able to close even a 5-minute bar below it. Oh, there's a buy signal. Okay, we're going to take this $6.60, $2. Okay, this will be, if we get smoked on this one, then we're probably done for the day. We got $2 and at 660, and our stop is going to be 659 even is our stop. So we'll see if they can fire a long here, even back up to VWAP would be great. However, if they get smoked to the downside here, then we're going to be sit on hands for today. NQ does not look strong here, so a little skeptical. I said NQ is in a trend day down, and that you do take each chart on its own, but that is a indication that the overall markets are weak and that the NQ is likely to continue pushing to the downside or at least sideways. So trend day, let me be clear about that too. Trend day doesn't mean that we have a trend day so the market's just going to do this all day. It means that you're not going to get very big bounces. So when they do get weakness, it's going to look more like this, and then down, and then like this, and then down, and then like this, and then down. So it's never going to be this, not never. It's generally not going to be a direct move, straight line, you're done. You're going to get these kind of sideways bounce movements that create buy signals because this looks like consolidation at a major level that's building for a move up. When really what it could be is just consolidation, bear flag, crush them. So we are at a key level, so I did take it off of last week's high, right? We do have some negative things. I'm skeptical about the trade. I said that up front because of the NQ. But you do have the Fed today that can cause a whole lot of fake outs. So we'll see how they play this out. They'd have to make a new low to stop us out. That's okay. That kind of confirms what we've been saying anyway, that this is a trend down and that they're likely to hit 658.57. Keep in mind, we've had plenty of trend days that go like this. So the reason we take that first one is they come back up and test a VWAP, and then they do this. Those are things that happen quite often. You're going to get some bull traps in this case. So they sell down, then they start to rip it higher. The bulls get in at late, and then they crush the bulls again. So in order to create more selling, they create traps. So that can happen very often as well. Will it? I don't know. NQ looks very weak. They just made another new low. ES is trying to hold on to this low. It's trying to hold on to this whole conglomerate right here. Last week's high, yesterday's low, this week's low is all right here. So, and you have the overnight action that also held this zone. So SPY is trying to hold on, while NQ is not. So if NQ is pushing lower, I suspect we will too. But the whole idea of trading is trading off of a key level, looking for the bulls to do their job, and if they fail, well, you got to understand when to quit. That's the biggest problem. You're going to have losing trades, but you don't want to go, oh, it's going long this time and get long again and then fail, and then this time it's going long and you do it again and fail. You just want to cut your losses and say, all right, that was a good try off of a good zone with a good idea. The idea didn't work out. That's it. The good news is on a day like today, your time value is really good for 0 DTEs, but your premium is high. So you don't lose or gain as fast as you would on a normal day because the accelerant of the day isn't until the back half of the day at 2 o'clock. So they can't trim the premiums down and crush your theta as much when they know that the theta can be realized all in 10 minutes of the Fed, right? So at 2 o'clock, if you could realize 60 points of downside in 5 minutes or 10 minutes and make a huge amount of money. So they can't trim down their premiums too quickly because all of the acceleration is in the back half of the day. Usually all of the acceleration is front-loaded at an hour before the open or after the market for earnings or something like that. So when the Fed speaks, and you lose, if you take a trade and miss, you don't get beat up nearly as bad as you would on a normal day. NQ hit 1.0 extension, A equals C, so should get a bounce. Maybe. C waves extend, though. Don't forget that. Bounce would be nice here since we're long. Looks like the bulls are trying to step up on ES and push back through the 8. Remember, they got above the 8, couldn't close above it, couldn't close above it. So closing above the 8 is strong. Spiking support and resistance is good. I mean, it's a start, but if it doesn't ever close down there, it tells you that the other side won. So they tried to get above the 8, and the bears said no thank you. Now they got back to the 8. So far, the bears have said no thank you. If they close above the 8, that means the bulls said, yeah, we're going to go ahead and walk through the door and stand here. What are you going to do? Right? Totally different scenario. Closing above or below a key level is way more important than spiking it. Once again, the bulls came back, tagged the 8, got above it even, rejected. You see, you can flatten a moving average by going sideways and closing below it, but you can't cause it to turn back up unless you close above it. So until they start closing above it, they're going to continue to get a downward sloping 8, and that's going to cause them to have lower and lower back tests unless or until they can close above that moving average. NQ pushing on the lows again. ES is as well, but NQ is much closer. So not looking great, but this consolidation here is starting to turn what I would call slow. So the bears need to go ahead and break down to continue their momentum. Otherwise, what happens, the reason they consolidate is eventually what happens is they consolidate sideways until the moving average gets below them. And then they're still going sideways, but now they're suddenly above that moving average, and they can start to change the idea of the moving average. So they need to get moving down here pretty quick, which it looks like they're doing. NQ already made a new low again. I suspect ES will too. A bounce off this 659 level would not be shocking at all. But they've kind of sort of tested it here. So what you really want to see, because the first time they get to a level is the best, especially in the regular trading hours. You know, pre-market's low volume, but post-market or regular trading hours, you tend to see more volume and more defense. So this, you'd really want to see them come down fast into here and get to that point so that the move is kind of exhausted and then bounce. But now what it looks like they're doing is trying to cut out the legs of 659 and pressure it and then push through it. So if they do start to spike down again, it could blow through on its first or second try as opposed to giving a big bounce because it kind of consolidated here and weakened this support, if that makes sense. These are all fairly decent looking bull bars if you look at the wicks at the bottom. However, there are wicks at the top too. So it's kind of a battle here. Very strong battleground underneath the 8. Basically, can the bulls break 650 or bears break 659? Can the bulls get back and close above the 8 are the two storylines. Bulls trying to put in a bottoming bar here. They've spiked the low and now have a hammer going here with 38 seconds to go on this 5-minute bar. So we'll see if they can follow through and close above the 8. Looks like they want to. Getting a hammer bar on the NQ as well. Back into the 21. This is going to be a key area for them to push through. Now remember, the 8 is the momentum. So they've just closed above the 8, telling you momentum is slowing, which is why, what are we getting? A buy signal. And the 21 tends to be your trend. So as they get back to the 21, can they hold or reject that to keep trend in the downward direction? The answer is to be determined here. And then again, of course, the ultimate backstop up there is VWAP. If they come into VWAP and get above that, that's a fairly significant move for the bulls to allude to them wanting to go back and test the highs again, since they pushed above the pre-market high and failed. So typically a failed breakdown takes us down to the pre-market low. I still expect to see that level today. Maybe we don't see it till the Fed. Maybe we see it after a bounce here. But those are things to consider. NQ is reversing that hammer bar strongly, and now you're starting to see the ES or SPY do the same. See if they can hold the 8 here. This will be an important benchmark for the bulls. Otherwise, this is just a spike up and then trap them and reverse them. Starting to look a little dead cat here. An instant close back below this bar's open would be a bearish sign. They should fight this. They are fighting it right now. They should fight this bar's open right here. And that's where you decide if the bulls are going to be able to kind of keep the momentum here. They're trying to fight back. So anytime you have a big breakup bar like this, if they come back down that bar, this area, the or the open of the bar, the bottom of the candle, or the actual body of the candle, is what we are looking at is short term. These are 5-minute bars, guys. We're not talking about big moves. We're talking about, can they hold the momentum? You can see this is where this one closed, this is where this one opened. There's a subset here of strength. They pushed back above, made a new higher high over this bar. So coming back into this zone should produce support if it's going to continue to be bullish. If they give this up, it's very likely going to give up the tail and ultimately the low. They were able to hold that, but not the 8. So kind of a mixed bag there. So something to just, while we're watching the market go up and down here, to think about when you look at the market. So if you go back and look at how this move happened, they came up, right, and then down. And then here, up here, they sold down. So this is really the top of the kind of selling bar, but they tried to break down here and failed. Then they came back up and made a new high. And then they came back down, and then they came back up. And when they really broke down, so this is what you have to look at. Where did they truly break down? Because now this is where they tried to break down and failed. This bar and this bar took us down, okay? So the top of this bar is a major selling zone because you sold really hard from here and failed. And then right above that, you sold really hard from here and succeeded. So they're telling you this zone is where they want to sell from. They sold from here and couldn't quite do it. Let them spike it up. Then they sold from here and could do it. So this area is a hugely important selling area. If the bulls get above that, it's squeeze city, right? If they stay below it, it is down we go. So they can come up, backtest this. This will be a key area. I guarantee you when they get to this area, you'll at least see this. Maybe this. Who knows? But you'll at least see this. And then if they get through it, squeeze. Those are things that are really important on charts to look at because they're important. The market is literally telling you what's important. It's telling you the exact area that matters. And so each of these bars, as they start to make their move higher, become important. This bar was a bull move trying to break out, and then they failed. So coming back and getting below that bull bar is the same as getting above this red bar. Boom, there goes the acceleration. And now you're going to look for maybe a little bit of chop down here and then squeeze through. And then they should come squeezing into the pre-market low pretty quickly. So the market is trying to tell you at every turn what it's going to do. You just have to listen. Now remember, spiking is different than closing. So they got to close below this bar. And once they do, accelerate, and maybe as they do, acceleration ensues. But that level is the key level because that is the bar that tried to break out and failed. So if they come back to it, that can be support where they push back. All that is a back test and then go, or a back test and fail, right? So each time you look at the chart, there is so much information on it that all you have to do is figure out where the levels are and what the chart looks like. This looks like a mess to most people. To me, it looks like a clear breakdown area, and that breakdown area is where they want to sell from. And if they get back there and can't sell, then it's going to be a squeeze because everybody who was selling from here gets stopped out, gets flipped to buyers, and you have a whole bunch of extra buying going into the market, which causes the breakout. Now you can see they're struggling with this area. They spiked below it, and now they're back above it. So you have two clear lines on the chart, in my opinion. Close below this, and you're very likely to continue into the pre-market low. Close above this, and you're very likely to squeeze up into new highs for the day. So hopefully that is good information for you guys while we, kind of watch a choppy market go sideways. it gives you an idea of how the chop works and why it works. Obviously, in the short term, the bulls have to get above this bar, this spike. That's obviously where so this was a back test of this, right? Look exactly where they came to. Here, draw your line across. Where'd they come back to? Right there. I am long at $2, Otis. So through all of this right now, I'm negative 5 cents. It's going to be hard to get a payout because the delta is so slow today. The market isn't moving too much, but you're also not getting theta crushed because, as I explained earlier, the acceleration of the market is all on the back half of the day. Now they close below that line, so it's probably not good for our trade. You do have some support here, but these are all tails. And that tells you it's an important area, but once they spike away from that area and then they come back down through the buying bars, that tells you the sellers are trying to be for real, not just playing around. Okay, we stopped out there at 190. Sorry, guys, I was talking to my wife to make sure my laundry got done. We did tag 659. So 190 on that stop out. We are seeing a little bounce off of that level. We'll see if it's a big bounce, but that was an unfortunate stop out because it hit us to the penny. And there's the buy signal again. I'm going to sit out the buy. We have a trend day on the NASDAQ. It has looked weak and making lower lows. So we are going to sit out the rest of the day. This buy could be amazing. That's not what this is about. We're not whataboutism or results-oriented traders. And what I mean by that is, let me update the trade, and then I'll walk through what I mean so that you guys can understand. One second. Let me just do this update so I can get everybody on the same page. So if you've ever played poker, you should, and specifically No Limit Hold'em or Hold'em, if you've ever played Hold'em. If you haven't, it doesn't matter. 2-7 is the worst hand you can be dealt, right? And there are so many people that have 2-7, and then they, of course, fold because it's a terrible hand, and then the board comes 2-2-7 or 7-7-2 or 7-7-7. Any amount of things that would work with that hand. That's going to happen so rarely that you playing 7-2 in the long run is going to crush you for that one winner that you got. And the net is going to be negative. So we don't do results-oriented trading and say, see, that buy should have worked. We should have taken the buy. No, we have indications that the market is weak and that the buying isn't likely to be strong. We gave it a shot. They failed and came back and made a lower low. And I get they're trading off a key level. It's not a bad place to take a trade, but statistically, over time, it's going to be a losing proposition. So I'm not here to tell you don't trade it. I'm here to tell you what my rules are that have produced 60% gains over 20 months. And that's important. So missing a trade is more important or more valuable than taking bad trades. If you miss a buy here, that's okay. You're going to miss a lot of them. We missed a sell because the markets weren't in sync. It happens. I don't concern myself with that because we catch a whole lot of trades that nobody sees coming. I know there's been a whole lot of days that people have said, I would have never gone long or shorted here. And then boom, we make a huge win. So all of that stuff evens out. Just remember that. So this buy, we'll see what happens. It's bouncing off the high volume level there. It may or may not do well. I don't know. But statistically, it's not going to win. So we're not going to take it. And we still have a target lower. We still have a NASDAQ that looks weak. And we also have expensive premiums today. So you don't want to keep chasing after things that may or may not materialize because you're going against probability. It's like, do you want to be the casino or do you want to be the guy betting against the casino? Yeah, you're going to beat the casino one day. You're going to walk out of there with a couple thousand, maybe even 10,000 or plus dollars, maybe a lot of money. But if you keep doing it, who's going to win? If you keep going to the casino every single day, who's going to win? The casino is, always and forever, because probability is on their side. And that's it. You trade probability. The probability of this being a winning trade is low, so we don't take it. We took one, we gave it a chance, we move on with our lives. Okay? Does that make sense to everybody? I hope so. Yeah, so there's a, can she help with your laundry? I'll ask her. Somebody wanted a big picture. So we'll do a big picture real quick while this is continuing. So far, they are selling back into that bar, but we'll see how it plays out. There's plenty of time for them to do something with that. So big picture, let me go to the right chart for that. I know it seems like a long time since we did a big picture update, but the reason is nothing's changed. The only thing that I would maybe change is that this 3 took shape as an ABC because this was a diagonal, remember, because 4 got back into wave 1 territory. So the only thing that I would consider changing is how I labeled it, but the overall count doesn't matter. I mean, it is what it is. So you have this 1, 2, and then A, B, C for 3 were 1, or C for 3, and then 4 and 5. The only reason I don't like that is this gets into wave 1 territory, which is what a 4 is supposed to do in these instances. And 5 is still reasonable there. So, sorry, 4 does not get quite into wave 1 territory. Wave 1 is right here. Yeah, so 4 does not quite get into wave 1 territory. It's hard to see here was zoomed out. But anyway, the point is we are 3, 4, and big Roman numeral 5, which all needs to be moved just a little bit. But we got a pretty clear 4, 5 up here at the top. Let me put this back where it goes now. And if you guys watched my big picture update, the very first one I put out back in 2021 or 2022, we were around 3, just under 4,000, 3,900. I said it was very likely we were going to 6,500 then. I believed that this wave 4 would be shallower and we'd still have this kind of run in wave 5. But what we got is a deeper wave 4 that caused this to be a little bit ugly. And when that happens, you have to adjust your views. So at any rate, Elliott was looking for this target for a while. This is clearly the target area. But we have a very nice 4, 5 here, and we're just waiting for this smaller 5th wave to end. So it's a 5 of 5 of 5 of 5 of 3. And that's essentially where we're at. So if you just go back and look, if we go to the monthly, we can go all the way back to the beginning of the stock market. And so you have a 1, 2, 3, 4, 5, which is the roaring 20s for your big wave 1. Then wave 2 came down and tested, the lows of the market. And then you had a 1, 2, 1, 2 setup. And then we had 3, and then A, B, C for 4 here. And then you had 5 of this bigger wave 3. So you had 1, 2, 3. And this has gotten moved around a little bit, but gosh darn it. Why can't I? Oh, did I? This must be locked. Yeah. There we go. You could call this an expanded forward, getting down into the weeds of that in the 60s, but at any rate, you see these kind of expanded flat moves happen from time to time, and they're really hard to deal with. COVID was one as well, and this one was basically a flat. So these big fours have been flats, but the one of the reasons we think that wave 4 will be as big as it is because wave 2 was very straight down, right? Very fast, very straight down in relative time. And so when you have a wave 2 of that degree that's fast, wave 4 generally is going to be slow and wide and be very zigzaggy and flat. So that's why we are expecting one of many reasons we're expecting a big wave 4 when it happens, a longer, not bigger, longer wave 4. But ultimately, we're still in the fifth wave, and we're still in the fifth wave of that fifth wave, in my opinion, and that's what we're looking at overall. So it's not necessarily that anything's changed. It's just these. I mean, this is a monthly chart I'm on, and it's a 100-year bull market. That's what people don't grasp, is they think that these things play out in weeks or days or even months. These things take years. This whole bull move that Elliott predicted right after World War II, or right around World War II, he predicted a 100-year bull market, and we are in like year 96 of that bull market, right around there. And so it's not an overnight thing that's going to happen. Now, what I mean by that is we're not just going to top overnight, or if it extends another year, that's a big deal. That's 1% of the whole move. If it extends another year, time-wise, it's 1% of the whole move. It's not a big deal. People get so caught up that the market keeps going higher or that the market does this. We're talking about a 100-year span, so we're doing our best to guess the time frame and based on the counts, but we're seeing this market, I mean, quite frankly, this looks like a blow-off top. You had all of this consolidation, and they smashed through it. They haven't even tested this area, right? And when that happens, does anybody know what happens when we don't backtest an area? It's the rule, not the exception, that the market will backtest. They will come back to this area. They never once came back to this area after they broke through. Not here, not here, not here. So that's why I think that roughly 1,500 is where we're looking. There's a lot of, if you like numerology and conspiracy and things like that, when the market hit its low right here, the low I believe was 666, right? Devil number. And we are really close, and that's on the SPX. And we were really close, if you look at the SPY, to 666 on the SPY. So a lot of people are conspiring that 666 SPY is going to be the top, because down here this major crash was 666 SPX. Kind of an interesting thought. I'm not going to tell you that that's a valid way to look at the market, but it's kind of an interesting one. Anyway, big picture though, we're looking at the same thing. It just takes a long time for these things to play out. You know, everybody who trades now, I've talked about this a lot, and I shouldn't say everybody who's under 35 or so that trades now has only traded in the internet era of trading, and they haven't really even been old enough to understand what a market crash looks like. Most of them don't remember the dot-com bubble. Most of them don't remember 08. Most of them don't remember that the 2000 crash went from 2000 to 2009. It was a 10-year crash. And that is a long time for a crash to play out. So we topped here in January of 2000, and we bottomed in February of 09. 9 years. This is a smaller degree wave 4. Very often we expect the market to come back to this level and the higher degree wave 4 to test this support. However, given inflation and things that happen that cause higher targets, I do think that backtesting this support level is more likely. If they do break through that, they break through it. But I think that backtesting this support at 1500, 1600 is more likely than coming all the way down here. But this took 9 years to play out, and it's a smaller degree wave 4. Larger degree wave 4 should take about double that time. And if you look at wave 2 here, this was from 37 to 42. So this was 5 years. And guess what? It was quick. And it was a clear zigzag. So that made this a long flat. Guess what this wave 2 is? Quick and a clear zigzag, which we think will make this a long flat. So that's why we think what we think. When you look at it on a monthly chart, backtesting here doesn't seem that unreasonable. And it's really not that unreasonable. People think it's crazy that this can happen, and I can show you chart after chart that it does happen over and over and over again. Okay, so let's see if I have questions here. How do you know if signals are actually profitable or not? If you pick and choose which signals to take, they are all your results and not accurate. That is not true, Gary. So if you watch the training videos, everything I say on these videos is covered in the training videos. We have a trend day on the NASDAQ, and we have a area that we took a trade off of. It didn't work out, and we're not going to burn up money. So the setup is there, and the training is there. So it's not just, and all of my results are accurate because they're all of my results also. Can you show how to do fib extensions on the big picture when I do this on the SPY from 1994 to 2000 as my wave 1? I get SPY 667 as the 176. Sorry, I get SPY 667 as the 1768. That's a little bit of a longer conversation because of inflation and stuff. But yes, I can do that another time. Or if you are in my rooms, I can maybe do it on a midday video and show you that. I guess, Gary, going back to your question to summarize that, we take 99% of the signals. The ones we don't take are generally on trend days, or we get 3 strikes and you're out. There's that rule too. So if you have 3 trades in the same direction and they aren't working out, then you sit on hands. We just don't burn up money. So there are lots of times that we sit out for the day because a rule is broken or a rule has come up that we don't trade. So it's not that I'm picking and choosing, it's that I'm following the rules. All right, guys, it looks like that's all the questions. Sorry about all of the issues today. I do apologize for that. That sucks. And I appreciate you sticking with me through it. I know it was a lot of headaches at the beginning of the day. So thank you for sticking with it. I appreciate you guys. We'll do it again next Wednesday. We'll see what the Fed has to say later today. That will be the very likely catalyst of the day. They have moved it down some early in the day here, but the Fed will either accelerate that move or reverse it, one or the other. So given the context of the day, I do feel like down is a very slightly more likely path. They are at 6,600 on the SPX. I said that would be a big level. They're fighting it right now. If they're below that when the Fed hits, my lean is down. If they're above that when the Fed hits, my lean is up. If they're right in this area, man, that's tough. But I still think down is my very slight lean. I'm not going to play it because the Fed is way too volatile. We don't ever play the Fed. It's just too much. And you can lose too much too fast is all. You can throw away $1.50 pretty quickly if you're on the wrong side of the Fed. So the risk reward to me just isn't worth it. But that's what we're looking at, and that's where we're at. So I appreciate all of you. Thank you again, and stay tuned to see what happens with the Fed.